Thursday, September 4th, and today, NFL kickoff. We'll talk about NFL. We will talk about my crying moment. I'm going to cry because I pride myself on being a duh moment investor where I think I can see something and boom it. This one, we should have seen it. Everybody should have seen it. So I'll go over that one. Apple and Google, why it's good. We will go over MicroStrategy. We'll go over one pick that I actually just bought this morning, and I will tell you why. We'll go over some additional stocks. We'll go over some crypto and earnings because you know what? There's one stock. If you haven't been in this stock, you're A, not listening to me correctly. B, you're not a subscriber of Alpha Picks. C, you're not a subscriber of Seeking Alpha Premium with the top 2025 and top second half 2025 stocks. And you just haven't paid attention. Again, if you're not in this stock, you know, Salesforce is what it was. We'll talk about Figma. We'll talk about a lot of stuff, plus a little homework assignment for you based on Macy's. So let me start out the show with a bit of life advice. If your HVAC tech, plumber, or electrician shows up to your house holding an iPad, he's just straight up going to fuck you. I mean, he is not going to take you to lunch before trying to just molest the hell out of you. That is a truth. That's private equity. That is a company that is looking, oh, here's the contract you can sign. That's essentially what's going to happen. So now, secondly, I'd like to give a shout out to Tim. He was kind enough in Cash App. If you didn't know, this is the OG way that I used to have subscribers. When I was growing this podcast, I didn't have the affiliate relationships. I was a paying customer. So the way I told folks to actually, support the podcast, I didn't even have a paid newsletter. I told people go over to Linktree and there's Venmo, PayPal, and Cash App. Okay. And I would say, if you made money on any of the picks, send me a little bit of money. Again, even if it's $1. That just let me know that, yes, I'm doing the right thing and I'm helping people. So Tim was kind enough to essentially pay for my insurance, my car insurance, as a super nice, just super generous. So Tim, I know the appreciation, the fact that I'm unhinged, based on the comments from yesterday, I think you appreciate me unhinged. So shout out to Tim. I thank you. And remember, everything is on Linktree. So, and since tonight is the start of the football season. I mean, the Fox, I think it's on NBC tonight or Peacock. So I don't know what the theme music is, but it plays in my head. But just let's go over sports betting. Because, you may say, hey, why don't you invest in DraftKings? Why don't you invest in, some of the other companies, some of the betting companies that have online like MGM? Well, I'll tell you who's the biggest betting company. It's freaking Robinhood. Sports betting is regulated. I remind you that Robinhood is one of the main players in the prediction markets. So there is going to be literally a degenerate who's going to take his entire IRA holdings on the Chiefs tonight. And there is nothing degenerate about that according to Robinhood. So I am there for that. And that is why I'm bullish on Robinhood. And again, I want to get under 100. I'm waiting for the 4-hour algorithm to trigger because it does seem to be trailing down. It's still extended on the weekly, but I am still a Robinhood bull. And I like this one to continue going up. It's putting in a nice floor at 100, but the indicators on the weekly still say, hey, we're a little bit stretched. Okay, so it is what it is. But if you want the sports betting, the spotlight's on DraftKings, FanDuel, Robinhood, and Kalshi. Robinhood is the only one. Again, Kalshi and Polymarket, you can't do in the US, as far as I know, without a VPN. So I'm not betting on football betting, but I'm betting on Robinhood being a big winner in that place. So now let me start out this with a Jim Cramer crying moment. I pride myself, okay? I do pride myself on being able to understand the markets, being able to take some information in, and finding a strategy that will make you money. So I want to say the hubris. I'm sorry to listeners, readers. This is essentially my Jim Cramer moment. I absolutely missed a slam dunk yesterday. And I think most everyone did because nobody brought this up to me. Now, mind you, I would not have been in this trade. It's a Chris Camillo trade, okay? American Eagle Outfitters, they told us, they literally told us, if you didn't see the Sydney Sweeney, I was joking about it for weeks. Sydney Sweeney did a added market cap. The stock soared. We knew that. And then what happened? It became a political, like football. And if you were one of the people bashing this poor girl who just did a jeans ad, shame on you. She did a freaking jeans ad, not a political message. She wasn't bashing anybody. She showed her ass in jeans. It looked great. So what happened yesterday? Again, when she did that ad, the stock was up 20%. What happened yesterday was American Eagle told us weeks ago. This is when the campaign started, by the way, down here at $10. Were you in this? Because it got you out at 10%. Got you back in at $13.64. Where are we trading right now? Up 23% at $16.88. Okay, they announced prior to these earnings that they had sold out of the Sydney Sweeney jeans. And then they reinstated their full year guidance yesterday. It was a bull, and we should have seen it. Everybody should have seen it. Now, full disclosure, there is no freaking way I was in this. Okay, 4-hour algorithm doesn't even make you as much as buy and hold. It loses 70% of the time. It's got too many positions taken over 24 months, 33 positions. So no way I would have done this. But I could have put, a couple $1,000 into this, made a few $100, paid off my premium and Alpha Picks portfolio, the subscription for that. Again, this was a slam dunk. And it's been a slam dunk since $10, to be honest with you. So again, this is my crying moment. They announced earnings. It was at 25. Again, it was duh. We all should have seen it. But the market is funny like that. You can't take 100% of the wins. You can't know exactly. But want to know what I am bullish on? Apple. It's expensive. Yes, I went over it yesterday. It's 30 times forward earnings with 5% freaking revenue growth for year over year. And I am transitioning to QQQ because I have tens of thousands of shares of Apple. And I'm stuck in a taxable position where I don't want to sell a ton of it. And I'm happy with that now. You want to know why? We just lifted the India tariff situation where Tim Cook went in and presented the honorable golden apple or golden chip, whatever it was. I mean, it was the douche chill moment of the year where he puts that damn thing on the desk. But you know what? Apple was excluded from tariffs then. And then we get these types of announcements yesterday because of the Google thing. Okay, Apple is going to overhaul Siri. That's the other thing that's happening. They no longer have to spend the $200 billion on AI. They're just going to partner with somebody, and it looks like it's going to be Google. I think the iPhone 17 launch is coming in with some really good news behind it, and it should provide a boost to the growth numbers because, again, the growth has been horrible. So if we just get continued growth, say it moves from 6% to 10%, which, again, is not worth 30 times forward earnings, but say it does something like that. This stock goes to 260. The comparables from last year, it's going to be an easy bet if they can get the iPhone 17 launched with some features that are going to be bullish. Now, the 4-hour algorithm had you in here at 218. Today, I got another indication that it's moving to another realm. Again, if you get over that 237, 238 realm, and we just look at where that came from, that was from back here in 2024, this time last year. Look, it couldn't get over it. It did pop over it. If this now becomes the support, then I don't want to hear people complain, why didn't I buy at 200? I told you it was the best risk reward. Again, if you bought at 200, and that was just June, it wasn't that long ago. That was June, and you're up 20% if you bought at 200. Now, if you're buying at 237, 238 today, understand that you may go back down to 200 if the iPhone is not great. But all of this news, Apple hopes iPhone Air launch provides awe from JP Morgan. The Air is the super light phone. So again, are they listening to customers and are they giving customers what they want? Maybe. We know the Mini, which is one that I would love, isn't actually one that took off with consumers. So again, if they get the phone right, that's going to be a boost. The other boost is just all of this Apple Siri stuff. Siri is a joke in the AI world. And I use it constantly, and it is a joke. But if I would have to say, I would say that Apple is going to do things right, and it's a $200, and I stick by it. It's a $260 stock at some point within the next year, and that is a 10% upside from where you are right now. So again, 260, is it going to happen overnight? Probably not. The other one in this whole formula, by the way, and you see it a lot, is Google. And Google's in talks with the small cloud providers to host TPU chips, if you don't know the difference. So essentially, NVIDIA has been GPUs and Google is TPUs. I don't know technically what the difference is. Like, I'm not going in there and looking at technical specs or sales or anything like that. The one thing that I know is that TPUs have been trained much more closely with inference than GPUs. So while NVIDIA is leading, Google is the leader in AI. And the reason for that is because of their own TPU chips. It's like when Apple went from Intel to Apple. They were able to more efficiently run their programs on their machines. That's what Google is with AI. So don't push Google out and say, hey, Google's no longer a good company, because Google TPU is the most successful XPU project. And again, I just read these things and I'm like, okay, I understand it a little, but at $230, if I had to guess, and I would say Google gets a premium valuation from here, I would say this stock is going to 300. That's where I would guess that it would go. Now, do I know for sure? No, because we're at all-time highs right now. The support, probably around 200. That would be a 10% downside. So again, you have to identify your upside and your downside. But I would say with the valuation that Google is getting right now, it's not that expensive. The quant says it's an F. But you know what? It's only 23 times forward earnings. That's not a lot in the Mag 7. Again, for a company that is $2.79 trillion market cap, that's not huge. But again, it's at all-time highs. Maybe let it die down a little. But, again, Tom Lee is bullish. FYI, just so you know, Dan Ives came out yesterday. Google's a great buy, blah, blah, blah. They're bullish. Well, I don't know if you're going to have a chance to buy it down between now and the end of the year. It is still a good buy. So I'm going to go over a stock now. Okay, one stock that I've been watching since it was $4. And the only way that I found that was going down here in Seeking Alpha to the top stocks. COMM is it right now. Okay, it's at $16.12. It's up 1.2% yesterday, 1.2% in the pre-market as well. That's the number one. So I constantly go down here and I look at this. And this particular stock, a few years ago, maybe last year, I think it was last year, was trading at $4. Okay, PSIX. Now, we're going to look at this because this top stock got a bid yesterday, was up 7%. Okay? Now, it's back to test for eight months. Okay? We're going to go back over here. We're going to go to TrendSpider. And we're going to look at this one. We know in the fundamentals, it's a strong buy. We know Wall Street has a strong buy with a $127 price target. Take that with a grain of salt because we look up here and there's only one freaking analyst that covers this one. We know it's an industrial. We know that's a hot sector. Okay, go and do your research on this one because you must know exactly what they do. I am doing this. I am buying this based on it being a top second half 2025 stock. That's my thesis. I've liked this one. The valuation is not extended. You know, again, 17 times earnings. That's not a lot. With growth of 40%, where the sector has growth of 3%. Again, when you compare it, and PSIX just had a cross up in the 4-hour algorithm and entry. It goes back 8 months. Okay. You can't back test this more than 8 months. It goes back here to December where it was trading around, let's see, $30 in that neighborhood. So it's only got 8 trades, 8 trades. 4 of them are losses. 4 of them are wins. 4 are wins, 3 are losses. Because the 8th trade is right now, 87.26. Okay, that's it. It's a strong buy in the quant. The only issue is valuation. Price to sales is high is what AI said. And the only way I know that, I went in here and analyzed it with AI. And that's exactly what it tells me. Okay, so valuation is high. Wall Street, strong buy. Again, 45% upside. Take it with a grain of salt, but he's looked into it more. You can also use Seeking Alpha to go over here and look at these. Wednesday, August 20th, he was saying it's a strong sell, a strong sell. Since then, it's up 8%. Are we going for another move? Because on PSIX, if you go and look at it, the 52-week range is between $15 and $121. Okay? My thought is we get a push back towards the $100 range. Now, am I looking for this one to double? No. But when I look at this MACD that's down low, the RSI coming off of, let's see, 45, and now it's at 53, and we've gotten a little bid, I like it. It doesn't trade high volume, so understand, this is one where I need to put my bottom on. Where am I putting the bottom on? Right back here in July. It popped up and then pulled back. I'm just using that $77, $78 as an alert. So I went in here and I set the alert in Seeking Alpha for where $78. This is how you use the tools that you have. I don't have to sit there and look at a chart. I don't have to sit there and worry about it. I set up an alert for a sell on here and I set up for a price alert at $78. Either one, if it comes up first, I will look to get out because this is simply a technical trade right now. That's it. That is it. Remember how I told you that Walmart was going to be a $100 stock? Well, it's up there at $95. And again, Walmart risk reward. Were you risking a ton of, a ton of your money to go to zero on Walmart? No. Your risk was, if you're buying at $95, $96, that you could get below the 200-day, which actually might provide you a better buying opportunity in a company like Walmart. I will trade this type of range all day. All day. So again, if we go over to Walmart and we look, because there's a lot more than one analyst that covers this. If you just go over and look, they're saying it's a strong buy. There are 42 analysts that cover this. Their average price target is $112. And you had the opportunity to buy at 95 with the tools. Again, I bought at 95. Now, also, if you're listening to me, and I'm sure I let this one slip, but I let this be known to the paid subscribers in the Substack chat. August 11th, I bought this. I alerted the paid subscribers that I was going to buy IREN. The reason was I had decided Salesforce, I was frustrated with. It wasn't going anywhere. I had a good 5-figure position in the Salesforce. And I said, I got to make up the years that I've been sitting in Salesforce because this is in my Roth IRA and I got to put it in something that's a little more risky. I didn't want to pay up for Nebius and Nebius. So I looked up, okay, let me look up some other ones. IREN. This is the symbol, okay? It just posted record profits. This is our buddy James Ford. He just went over this. I booked 50% profits last week on half this position, selling it at around $28. I saw it hit 30 yesterday. I was a little back, but James goes over this entire investment and he does a great job. He gives you the entire thing. I like it. And again, to paid subscribers, I gave you everything. So again, putting it back to the beginning, I don't think I was on air, but it was during the live YouTube right before I hit record. But again, that paid for your entire subscription to the Daily Stock Pick newsletter. So if you want to support me, go over here to the newsletter. You can find all of these things, by the way, on Linktree. But again, IREN, that should have paid for your newsletter. Now, in this chat, Ben brought up MicroStrategy. They've had some interesting moves lately, and I've been watching it from the side. Saylor is literally doing everything he can to manipulate Bitcoin's price by raising capital in different ways. He's diluting shareholders. This was a great analysis of things like this, okay? This particular person goes all of the bond analysis where they're doing long-term and short-term bond releases, and then how they're diluting shareholders. He gives you the risk, why he's changing his strategy. I'll tell you my strategy on MicroStrategy, okay? My strategy on MicroStrategy is using the 4-hour algorithm. Now, does it have a buy right now? No. Okay, it's at 329. I know from the last one that I did, the NAV, net asset value of MicroStrategy, is around $400. But since Saylor's doing all of this other financial manipulation, I don't think that's right. And I think the market is taking this down in realm. So my strategy with Bitcoin overall is to buy MicroStrategy when the 4-hour algorithm gets me in, because it performs well. Look down here, you can see it. 1,565% versus 897%. You can see it. And if you want the 4-hour algorithm, all you have to do is go to Linktree, and it's the top link. You can get it for $50 a month. You can get the 4-hour algorithm. This one might pay you back in a very short time. $50 a month. Again, it's a strategy, but my strategy overall with Bitcoin, and I've learned my lesson, I'm just buying when the 4-hour algorithm tells me to buy. And today I will buy more IBIT. 63.92. I'm going to get into IBIT. Right now it's trading at 62.98. So I may get a better price right along the 200-day. I'm perfectly fine with it. And then you might ask, why am I buying Ethereum? Okay, my Ethereum strategy is a little different. Ethereum, I am still pushing in to my positions. So I'm still buying. Now, am I selling here with a 76% gain? No. I am going to buy more when the 4-hour algorithm tells me to buy. In fact, I bought more this week because it gave me a false signal. And it might get you right back in. I don't know what price I paid for this, because this, again, is a buy and hold. Why? Because I believe JP Morgan, Robinhood, and all other banks will start tokenizing the banking system. Like Tom Lee said, what platform will they use? Ethereum. That is going to be built on the Ethereum platform. Hood has already started this. And it's why I like Tom Lee's BMNR. And I've gone over this one before. I like this one. BMNR. He was on record as saying every dollar that you put in here buys $3 of Ethereum. He couldn't tell us how. But again, do your own research. Understand there are other crypto treasuries, but this BMNR is similar to MicroStrategy in relation to Ethereum. So I like it. Again, I like it. And FYI, news alert. Tom Lee is bullish, even for September, because of the Fed cutting. So he's saying, hey, I'm bullish. So keep an eye out. I mean, this gives you all the reasons why he's bullish, and there are reasons to be bullish. And I'll throw this one out there, okay? Credo. We're going to go over earnings now. They beat and guided higher, okay? It's up 12%. Let me just go over. If you don't own Credo and you listen to this podcast, you're not listening effectively, or you're not buying the tools, because this is a top 2025 stock from January. And we can go and look at the chart, okay? Credo is a top 2025 stock that was announced on January 15th. And it may seem like, oh my God, I bought on January 15th at, let's see, $76. And I was way down there, okay? It was an alpha pick in February, and you had to buy around $70. And oh my God, you lost money. And then in the second half, on June 15th, right here at about $76, Steve Crest announced it again as a second half winner. Okay? Had you just used the 4-hour algorithm and understood that this is a stock that you can get into with confidence, because Steve Crest is confident, and I put a lot of confidence in Steve Crest, you'd be up 211% had you just used the 4-hour algorithm to buy like I did. Again, were you buying the dip? Because I was adding to it during this time. And I was on the podcast saying I was buying this dip. Now, I did sell half of my position at $97. I've been adding since. So if you're listening to the podcast and for some reason, there is no way you've lost on Credo unless you bought up here at like 132. Let's see. It's back up there. It's at 139. There is no way you could have lost on Credo during this year. None. Zero. If you lost, you panic sold. That was the problem. Okay? If you're not in the stock, you're just not listening, you're not subscribed, and that's where Seeking Alpha can help you. Again, I just talked about Seeking Alpha Premium and Alpha Picks. You can get the bundle. This stock alone would have paid for that, would have paid for the subscription. But it jumped on its Q1 financial results, showing revenue growth of 274%. And FYI, they guided to 120% year-over-year revenue growth through fiscal 2026. Again, they are pushing it. Spending in HI is strong. Wall Street doesn't even have this one up at the price today. They will chase it up. It's expensive. At this point, it is expensive. Am I comfortable adding to this? No. But with that kind of growth, it's going to be huge. So I continue to think that this one will continue to return. But year to date, you're up 85%. Over 1 year, it's 294%. At some point, you're going to see this one pull back. But again, 2-4 bought as part of Alpha Picks portfolio. You can see the notes. I've got a bunch of this. I own a bunch. So that's Credo. Now, I said IREN. I pulled out of a CRM for IRIN. Is it IRIN? Let me see. IREN. So I sold Salesforce. I didn't feel comfortable with it. They did fine on earnings. They reported a good quarter. It's down 5%. I made the right move. Again, sometimes I do the right thing. Sometimes I don't. I'm up 50% on CRM. I would have been down 5% again on Salesforce. So it made sense for me to sell. Again, I just have theories. Nobody knows the future. This one could have been up 10%. CRM is begging for a move up. I would say put it on a watch list. Why? Because they just announced yesterday they're laying off 4,000 people. That's going to be a huge boost to the stock, but it's still down 5%. You're still in this downward trend. But this stock around the 200-day has been a buy. On this weekly, the 200-day is 236. You're trading at 242. If you like CRM, if you believe in Benioff, this is one that's beaten down. 4-hour algorithm doubles buy and hold. So if you want this stock, use a strategy that works. It's the 4-hour algorithm. It's as simple as that. I didn't. I bought and held this one. I made a mistake. I decided to get out. Am I going to look back on this one? I've got it on a watch list, so I can always buy back in. And then people ask me, well, Figma, they reported yesterday. It's exactly what I thought. They beat the stock back 17% as of right now. Okay, where's this stock going? Where's the stock going? Because remember, you could have bought this on the IPO at $40. That was where the IPO went out. It was initially priced at $30. Well, today in pre-market, you're at 56. Look at that stock chart. It's straight down. So I want to know who the fool was that bought at 142, because there are still people holding. You can see it on the right-hand side here. You are still seeing people holding up there at 142. It might even go to the IPO price of 20. It's trading at 224 times. If we go and look at Fig, this is how you use this service. Again, look at the valuation, 233 times forward earnings, and it's not making money right now. Again, you have to understand what you're doing. Now, I do want to give you a homework assignment, okay? Because Macy's is one that I went into yesterday, earlier. I didn't like it. Empty shelves, empty escalators, no clothes that I really wanted, overpriced home items like a $400 pillow, and no employees that looked happy. Didn't like it. But they announced yesterday, and they announced some target, and the stock was up 20%. Kramer was on air just touting this one, okay? The homework is, don't buy this one. But I want you to write yourself a note, okay? I want you to look at the chart, and whatever time frame you want to look at, test your systems and say, okay, where do I think this one's going to trade to? Because the 4-hour algorithm had you in at $12.69. Again, in pre-market, you're at $16.33. That's a pretty damn good move. 20%. So again, understand what you're doing, because if you come back in a month and it's nowhere near the price that you actually thought that it would be, then you're not reading the charts correctly. There's something wrong with the way that you're reading the chart. And I'm not going to give you this answer. I'm not going to look at this chart for you. I'm not going to do anything. I want you to do this on your own. Don't go and buy the stock. Just predict a month from now. On October 4th, where is this stock trading? At what price? And give your thoughts in your notes. Journal it. That's your homework assignment. So take your phone, go on Webull, whatever process you have today to look at a stock. If it works, you should be close to where you say on October 4th. Okay? I'm going to do it myself. I'll make a note. Maybe I'll remember to pull it up on October 4th. But again, that's the way you look at this. Now, tonight's earnings. We've got several. We've got, let's see, Broadcom. Are you boosting this one? Again, Broadcom, I mean, $1.54 estimated. They reported $1.58, so lowered expectations. $15.83 billion in revenue. They reported $15 billion last time, so expectations are a little high. If we go over and we look at AVGO, which is the symbol, it's trading at 45 times forward earnings. It's expensive. Yes, it's expensive. Wall Street says it's a strong buy. They think the average price target is $307. Okay? When you look at revisions, some are bringing their estimates down. So they do have some type of lowered expectations. But again, with that Wall Street strong buy at $307, where's your upside on this? Is the risk worth the reward? Because could we pull back to this 253 on something bad? Again, AI, I don't see anything bad happening. But are you going to 350 or are you going to 250? Where's the next move? And that's the risk that you have with earnings. So is it can it pull off another credo where it's up another 10, 20%? Could it be at $360 by the end of the day tomorrow? That's an all-time high. Again, it's not a huge market cap. It's not like Nvidia. It's 1.42 trillion. So could it get to 2 trillion? It could. That would push it up to, about $400, $500 per share. It could get there. But when you look at their financials, what are they making over the year? 57 billion. 57 billion in revenue. That's not even. That is the trailing 12 months, 57 billion for a $1.42 trillion company. That's huge. And when you look at their valuation, again, 45 times forward earnings, it's number 13 out of 68. What's the number one? Micron. Micron's got its own problems. Taiwan Semi, I love it. Credo's number 10. So don't think that, names down at the bottom of this list can't perform. They can. Now, let's go and look at another one, Lululemon. Okay, this is one of Chris Camillo's big convictions. He's kind of pulled back on this one recently because he said that the current Google searches aren't supporting it. $2.85 per share is the estimate. Last time they reported $2.60. So it's increased expectation. 2.54 billion in revenue. Last time they reported 2.37. So again, increased expectations. Now, is that crazy to think that this company could do that? No. For our algorithm, if we are down after earnings, I'll just say, hey, it saved you. If not, then it made a mistake and got out. I like the gap above it, but am I willing to risk it on a stock that long term, it's lower highs? You can anchor this from any area. If you anchor this back in 2017, then it's great. Again, you are paying today where you were trading in August 2019. So if you bought in August 2019, you enjoyed the upside, but today you're saying, oh God, why didn't I get rid of this? So again, risk reward. Now, another one that I think might be a good play. It's interesting. And this is super interesting. Full disclosure, I am probably not going to buy this one. I may buy with a small amount, but it will be just a play amount just to see if my thesis plays out. But this is interesting because I played this one before and I've won on it. But 84 cents, DocuSign, DOCU. Okay. Earnings per share, 84 cents estimate. That's down from the 90 cents they reported last time. Lowered expectations. 7.79 million in revenue. They reported last time 763. So it's elevated expectations. Again, revenue should be going up. When we go and we look at Docu, is it expensive? Yes. Yes. 21 times forward earnings. It's not in those tech sector kind of ways. This is application software. Again, it's a software company. We saw what Salesforce did. This one may be in the same realm. Docu, though, I will point to you that in the 52-week range, we've gone all the way up to 107. We'll look at the chart. But when I put it on Wall Street, okay, their upside is $89. That's the average price target. There are 22 analysts that cover this, but 16 of them have it as a hold. When you look at their revisions over the last 90 days, a lot of them are up. 3 earnings per share down. That's the lowered expectations, but revenues, they're all up. Now, when we look at a technical side of this, does this make sense to buy? Well, you've got an upward trend from 69 to 75. The 4-hour algorithm over 24 months trades 22 times. You win 11 times, you lose 11 times. So it's 50-50. It's a coin toss. But your average win is 12%. So if I just take this and say, okay, if my average win is 12% and I'm at 10%, then I might have 2% upside. But, and this is a big but, there are 2 things that I like here. First is, every time we've gone up to this 200, well, I should say that I don't like. One thing that I don't like, one thing I do like. The one thing I don't like is every time you've gotten to this 200 day, right here, right here, right here. Again, it's been resistance, although back here in September 2024, it was support. Back here in May 2023, when it popped up there, it was support. But the last earnings, you had a gap down. With a good earnings this time, you could get a gap up. Now, on a weekly, you look at it and we've got a 200 day that's trending down, and it uses that as resistance. Now, it hasn't used it as support. The support is at 70, but remember, the 4-hour algorithm got you in at 65. Now, I will tell you, the 4-hour algorithm actually does well. 100% versus 61%. So I would take this and I would say, you know what? My upside might be 2%, but it also might be somewhere in the 90s. And that might be a big move. And again, it's not super expensive when you look at the valuation. Their growth is the problem. That the growth is, and you can analyze it with AI and you can look at it, but that's how you trade these types of things. It's risk reward. So for tonight, I'd be looking right at Docu. That's where I would be looking. Now you got UiPath, Internet of Things, and Copart. You've got a bunch of other earnings. But again, the street will be focused on Broadcom. I think a lot of the bottom feeders will be focused on Lulu. I like DocuSign, but I don't love it. There's a lot of reasons. DocuSign is one that I have used copycats of. So I'm not a huge fan of, hey, there's a ton of software out there that lets you sign. This was kind of like a Zoom where it was, oh my God, this is the greatest and latest thing where you can sign online for documents. It's recognized legally, blah, blah, blah. There are a ton of copycats out there. So I like this one. It's still the leader in the category. But again, you know, their last earnings just didn't leave a lot to be desired. But if you can start to fill this gap, boy, that's a big move up. So pick your winners and identify. Again, I went over everything. And I've gone over Alpha Picks for a long time, okay? Every show I go over Alpha Picks. Alpha Picks, a data-driven portfolio that outperforms the S&P. Why do you want to buy it now? Well, we're heading into September. And with rate cuts, typically small caps outperform. That's what Alpha Picks is mainly built of, small cap stocks. That's how they outperform. And again, it's a data-driven portfolio. So you get the alerts when to sell. You get the alerts on the 1st and the 15th when to buy, and you get when to sell. The stock that came out on the 1st, I bought double the allocation. I'm up like 2 or 3%. It's fine. Am I going to add more to it? No, I'll probably use the gold pick that was in June, which is up like 30%, 20 or 30%. I doubled down on that one as well, and I've been adding to it ever since. So it's a great portfolio to get ideas from, to be able to add to your winners, but it also is a portfolio that you can simply just implement. It takes about an hour to get it all set up, and then afterwards, boom, you're done. Add that with premium and you've got your bundle. And if you don't want the bundle and you just want premium, you can get the hack here. Go and get the free 7-day trial of Seeking Alpha by going to my link tree. Again, all the links are here. You can pick and choose which one you want, but at least go and get the second half 2025 stocks and the 2025 stocks, because they have outperformed, but there are quite a few of them that are underperforming and you could buy the dip on. They're good stocks. And if you want my 4-hour algorithm, again, TrendSpider, the sale is up there. It's $50 a month for it. It's all on Linktree. And I will include in the newsletter. The newsletter is free every day. It is 100% free on a daily basis. Not every post is free. You do have paid ones. But at the end of them, I include scans. And what those scans are stocks that have an entry in the 4-hour algorithm. And the 4-hour algorithm on many of these performs really well. So again, Palantir yesterday, Walmart yesterday, Arista Networks, Comcast, Mondelez, even DRV, which is leveraged ETFs. I'll post the links today. So if you have any questions, you can hit me up. Everything's on Linktree, even my email address. It's linktr.ee/daily stock pick. I will talk to you tomorrow. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.